Overview on the 3% tax on the market value on property.
Legal entities that directly or indirectly own real estate located in France are liable for an annual 3% tax on the market value of these buildings owned on January 1st each year. In the case of a chain of holdings, all entities in the chain may be liable to fill the tax form and to pay the tax. Fortunately, there are many exemptions. Firstly, there are some automatic exemptions. The tax is not applicable to listed companies nor to entities whose French real estate assets represent less than 50% of all French assets held directly or indirectly. Assets allocated to the business activity are excluded from this ratio. There is also an exemption for entities that are registered in France, in the European Union, or in a country with a mutual assistance agreement, provided that the proportion of real estate held directly or indirectly in France is considered not significant, meaning less than 100,000 euros or 5% of the value of the French real estate asset. Secondly, there are exemptions subject to the disclosure of information. The tax is not applicable to entities that are registered in France, in the European Union or in countries with a mutual assistance agreement, and that undertake the responsibility to provide the French tax administration with information on the nature and value of the real estate and on the identity of its shareholders within 2 months following a property acquisition. If the commitment hasn't been made within 2 months, the company can still benefit from the exemption if it electronically submits a specific tax form before May 15 each year. If the entity is not exempt, the payment must be made at the same time as the annual tax return. For entities not resident in the European Economic Area, the French tax authorities may require nomination of a tax representative in France to draft the tax return and to manage the related correspondence.